All right, let's get right into it. If you've been watching the markets lately, stocks, crypto, the whole shebang, you've probably felt it. This weird, quiet tension, like the entire financial world is just holding its breath. So today, we're going to break down exactly why everything feels like it's teetering on the edge of one single massive move. And that's really the big question, isn't it? Why does it feel like every single market is just stuck at this tipping point? From Bitcoin to the S&P 500, all these major assets are in a state of limbo, just pressed right up against these supercritical levels. This isn't just one chart looking weird, it's happening everywhere. So what's the deal? Well, the short answer is one word: confluence. We're seeing this rare moment where a bunch of powerful macroeconomic forces, technical chart patterns, and just general investor feeling are all converging. They're all pointing to the exact same conclusion: something big is about to give. The pressure is building and you can feel it everywhere.
So first up, a market on hold. Let's talk about why everything feels so stuck. What's interesting is we're not seeing markets that look like they're about to fall apart. Instead, you've got asset after asset, Bitcoin, major stock indexes, all pushing up against major resistance. It's like they're trying to break through a ceiling, and that's creating this incredible pressure.
And really, this is the perfect way to think about it. The market isn't quiet. It's not boring. It's a pressure cooker. It's a coiled spring. There is a huge amount of potential energy building up just under the surface, and it's just waiting for a catalyst to let it all out, either to the upside or the downside.
Okay, so what's the catalyst everyone's watching? Well, it pretty much all comes down to the Federal Reserve and interest rates. For months now, the market has been working on this bizarre logic where bad news for the economy is somehow good news for investors. Let's unpack why that is.
And this right here illustrates the point perfectly. Not too long ago, the Bureau of Labor Statistics came out with a really shocking revision to its jobs data. Now, the reaction was, of course, immediately political and very charged. But for the market, that whole political fight was just background noise. The real signal was in the numbers.
And what a number it was. Nearly 1 million jobs, just poof, gone from the data. This wasn't some tiny little adjustment, it was the largest downward revision ever recorded. And it completely flipped the script on how strong the economy was, suggesting things were actually a lot weaker than anyone thought.
And here's the paradox. This terrible jobs report was exactly what investors were hoping to see. Why? It's simple. A weak economy forces the Federal Reserve's hand. It means an interest rate cut, which, pumps money into the system and pushes asset prices up, is no longer just a possibility. It's pretty much a guarantee.
And you could see this happen in real time. Traders immediately started pricing in a much more aggressive move from the Fed. The odds of a bigger 50 basis point rate cut jumped in a single day. The market is basically betting that the Fed has no choice left but to act, and act decisively. Now, this is the fuel for the fire. There's a mind-boggling $7.4 trillion just sitting on the sidelines, in cash, in money market funds. This is all capital that's just waiting for a green light. And a Fed rate cut, that's the biggest, brightest green light you can get. When that money decides to move, it's going to move fast and with a ton of force. So if a rate cut is the spark, where's the explosion going to be the biggest? Well, to figure that out, we have to look at this really fascinating kind of hidden connection in the market. It's this unlikely twin to crypto that helps explain why everything feels so divided right now, and that twin is small cap stocks. To get this, we have to talk about something called market breadth. See, a healthy rally is like a rising tide that lifts all the boats. But what we've had recently is really weak breadth. It's been a rally led by just a few giants. Think Nvidia, think Bitcoin, while most of the other assets have just been left in the dust. This table just lays it out perfectly. On one side, you've got the leaders, right? The S&P 500, Bitcoin, they've broken out to new highs again and again. But on the other side, you've got the laggards, the Russell 2000 index, which tracks small cap stocks, and the broader altcoin market. And look at that, they are still stuck way back in their 2021 price range.
I mean, just think about that for a second. Almost 4 years without a new high for the altcoin market as a whole. That is just not normal. The data here is crystal clear. The fate of the altcoin market is tied directly to the Russell 2000. For altcoins to have their real moment, we need to see the small cap stocks finally break free from this long slump. Okay, another key piece of this puzzle is just checking the vibe. What's the investor appetite for risk? And one of the best real-time gauges for that is the IPO market, especially for crypto companies. Are people still in that gold rush mode, throwing money at anything that moves? So let's look at two recent examples that tell a story. First, you have the IPO for Bullish, which is this institution-focused exchange. It was a massive success. Tells you the public markets are starving for regulated ways to get into crypto. But then you have Gemini. They filed to go public while also revealing some pretty big losses. So this shows that, yeah, the market is hungry, but maybe not so hungry it'll eat just anything.
So what this means is that Gemini's IPO, whenever it happens, is going to be a huge litmus test for the market. If it does really well, even with those shaky financials, that's a signal that the speculative fever is running hot. But if it struggles, that could be the clearest sign yet that the froth is finally coming out of the market.
Okay, so we've covered the big macro picture, we've looked at the internal market relationships, and we've checked the sentiment. So as we sit here inside this pressure cooker, what are the actual specific signals that are going to tell us which way this thing is about to break?
Here are the four big ones to watch. First, all eyes on the next CPI inflation report. A low number basically seals the deal for a rate cut. Second, that Russell 2000 breakout we've been talking about. If it finally breaks above its 2021 high, the altcoin market is probably coming with it. Third, watch gold. If its big rally starts to fade, that money might rotate back into riskier things like stocks and crypto. And finally, Bitcoin itself. It absolutely needs to hold its ground around that critical $60,000 level to show there's a strong foundation for the whole crypto space. And that's where we are. All of these different forces are converging on a single point. Every chart is telling the same story of this incredible pent-up pressure. It really feels like we are just one data point, one chart breakout away from an absolutely explosive move. The only question left is, which way is it going to go?